the demand dynamics and the setup here, at least from a high level, are perfectly clear. As you said, artists make more money than they out touring than they do selling albums, and so they need to get out on the road. Capacity is more than ample. In some cases, Live Nation owns some of the venues. Many of them they do not. But what we also know, and it's been proven across all of our experiential leisure coverage, is that people do want to get out and do stuff. And even before COVID, we've known the appetite for live entertainment is a growing dynamic. Now there's a better adjective for how it's going to grow the next couple of years. But the one catalyst, and I do want to point this out, Tyler, is when we talked about what happens beyond 23, what happens to our terminal value, it became clearer that this is going to be a multi-year dynamic in terms of how we climb out of this from the perspective of Live Nation.
Explain that thought a little more. Take us through your hypothesis there as you get beyond the immediate 2021, 2022, where you can look and see that there's probably going to be a hockey stick kind of move in attendance and presumably revenues that derive from that. But what happens after that and why? Yeah,
we hesitate to hockey stick is, that's a bit of a dirty word for us, right? What I would say is when our estimates run through 2022, 23 we have not forecasted, but when we do build a DCF, we think about what the long-term trend line of growth is going to be, right? And we have a double-digit growth number in our DCF for 5 years before we get out to that terminal value. What we wanted to be clear about is the notion that, artists will need to get out on the road in the next 18 months. What we know is that there's a practical, logistical reality for how the larger concerts, festivals, and mega shows are planned, and that takes time. That can take a number of months to get set up. And so by the time we get toward the fourth quarter of this year and into next year, the pipeline continues to build for those large shows. And one of the points we make is that 22 should have double the number of mega shows, festivals, et cetera, as it did in 2019. And we expect that to carry through. So when we get to 23 and beyond, if we're talking up, down, sideways, we're comfortable with up.
I said hockey stick. I apologize. You said album earlier. I haven't heard the word album in a long, long time. Everything is a stream and a drop. But I'm with you, brother. I am so with you. I can't even tell you. A little Steely Dan on a turntable, that's what I'm talking about. All right, let's talk about where Live Nation, what kinds of events is, and what kinds of venues is Live Nation uniquely, or do they have an edge in? Is it places like Jones Beach or Madison Square Garden? What is it?
Well, they are the market share leader when it comes to promoting these events. And in some cases, they do own the event, own the venues. In many other cases, most other cases, they do not own, the venues. But what they have is a set of historical relationships with the artists and with the venues that enable them to put those events together, whether it's a large festival, whether it's Gov Ball, or whether it's a concert at Madison Square Garden. And I think that's where their leadership comes in having the network to put those things together and execute. What's interesting about the model, Tyler, and my sense is we're going to get there, is that when we look at the concert business, revenue-wise, it's very, very large. The profitability on it happens to be relatively small. It's about 2.6% when you get down to the adjusted operating income line. Whereas the ticket business, and they do own Ticketmaster, is quite a bit higher, right? And so in a similar way, the concert piece is critical. It's large. It has a lot of scale, but it begets what they do on the ticketing side, where the margins are quite a bit more normal in the mid-20s.
Shepard Smith here. Thanks for watching CNBC on YouTube.